Welcome everybody. This is the Thursday evening Viper Trading webinar. Tonight is Thursday, September 12th, 2019. Tonight's topic is proper placement of targets and stops. Should be a good one. Got a great turnout here tonight. Before we get to the charts with the trade setups, we've got to knock out our standard disclaimer. Let's go ahead and take care of that. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Okay, now before we get started here, for those of you that actively trade futures, either with us or you're visiting on our little open house thing this week, can you just go ahead and type in the instruments that you'd like to see me cover tonight in the webinar? You know, maybe you trade ES, maybe you trade crude. Let me just get a flavor check for what everybody's into. ES, okay, we got ES here. What else? Any gold traders? Quite a few CLs. Okay, we got the CL here. Gold coming in too, solid. GC. Okay, good. Most excellent. Let me transition. Hey, Louie. Just coming in. We're just getting started. Haven't missed anything yet. Let me change over to, I think it's screen one. All right. I see quite a few new faces in here, so I'm going to take just a couple of minutes to orient everybody as to what you are looking at here, particularly if you're brand new and you haven't seen this before. I'll do a quick overview of what it is and what we do. So we here at Viper Trading Systems, we've been around about 10 years now, and we trade actively the futures markets intraday. And normally it's about 2 hours in the morning between about 6 a.m. and roughly 8 a.m. plus or minus a few minutes. And we normally get good volatility in that time frame to capture some movement to make some pretty good money. And we've developed these indicators on this chart over several years. And let me talk a little bit about what you're looking at here. Now, tonight, I want to tell you that we're going to be rolling the equity contracts from September expiration to the December. So you know, if you're trading ES, you're going to want to roll that to December for the purpose of tonight and the trades. And what I'm going to show, I'm going to go ahead and continue to show the September contract tonight, but you do want to roll that. So tomorrow you're trading December, your broker is going to give you a little love call. And it might not be good. Okay, so we're going to look at gold too. That's on the December contract. We're not rolling that. That stays the same. Crude oil, of course, is in October. That doesn't change. And of course, if you're a NASDAQ, a Russell, or YM trader, those are also equity instruments, and you're going to want to roll those too if you trade those to the December contract. And let me just show you real quick something here off the chart. This is the sort of de facto website for futures. It's called, most of you, of course, know. I need to take care of one thing. It's going to take about 15 seconds. Stand by. I'll be right back. All right, sorry about that. A little thing to take care of real quick. If you are coming in late, don't worry. This is recorded. After it renders tonight, we'll get it up on the web, both in the subscriber area as well as the website itself with the free links. On the webinar page, the de facto site for futures is called cmegroup.com. If you have not booked it on your bookmarks in your web browser, you're going to want to do that. And let me show what that looks like very quickly before we get into trade setups. Here is the site. Now, when you scroll down to about the middle of the page, you're going to see the groupings of various futures instruments. These are all delayed quotes, of course. So here you can see crude oil futures are still October. And you're going to see a corresponding volume over here. Now, what's going to happen tomorrow is all these equity products, E-mini S&P, NASDAQ, E-mini Dow futures, and the Russell, are all going to roll from September to December, and you're going to see the volume on them also roll. So that's why we stuck with the September contract, was because you can see here, I think there was 4 to 5 times as much volume on September as December, and so now we roll, and theoretically this will flip-flop, and you'll see 4 times the volume on that. So bookmark that. That's what keeps you current in terms of the futures. Back to our charts here. So we're plugged into a data feed from our broker, NinjaTrader. This is the NinjaTrader platform that we're on. Ninja 7. We do have all these indicators on Ninja 8. For the purposes of tonight, I'm going to just show the charts on 7. And so we've created these indicators, and what they are is background colors that correspond with the various types of volatility you get. Just real quick here. So when you are in a range-bound condition, as you can see that ES was right here, the characteristics of a range are a number of breadcrumb clues on the chart. The mid-band and all the bands around it are flat. You're not getting higher highs or higher lows. They're all about the same location. And you have a striped background that looks like this. There's not a uniform color to it. This is called sideways consolidation or chop, and that's the characteristics of seeing it. The bar colors are going to vary from blue to yellow to red, depending on where you're at in the range. We'll talk about how to trade this in just a minute. Now, normally when you come out of a range, you can go into other ranges. It doesn't necessarily mean you're going to go into a trend. But when you do go into a trend, in this case it was up, and this is the morning yesterday of September 11th. Characteristics of an uptrend are higher highs, higher lows. Background turns a solid green. Bars are predominantly blue. And you can see very prominently here that the midband, which is the thick middle line here, is stair-stepping in an upward manner, as well as all the bands around it. So we have 1, 2, 3, 4 bands below, 5, 6, 7, 8, 3, 4, 4 bands above. And then we come up to a swing here. This was overnight. We consolidate a little bit more. This is not unusual after a big trend move to find the market sort of digesting what it just did. And then as you can see here, there's a trend reversal going into the morning of the 12th, which was midnight Pacific right here. So you would simply need to adjust these time frames to your local time zone for what you experienced on your charts, depending on where you're at in the world. Now, let me blow this up a little bit so we understand what a trend change is. And then we'll jump right into the topics that we want to talk about tonight. Now, the way that all trends start is with a push or a thrust into the trend direction of where it's going to go. In this case, you can see that we broke this support level right here on ES, and we do a thrust down. So characteristics of a downtrend are now you get a solid red background, right? You get the mid-band and all the corresponding bands above and below stair-stepping down, right? Bars are predominantly red. And so the way we take trades, is everybody seeing this chart? Cursor moving, ES chart, thrust down, red background going into a downtrend. Downtrend, yes. All coming through clear, nice and clear still? Audio still good? Yes? Okay, good. All right, good deal. Now, the way we approach this is we are what you call pullback or retracement type traders. So it's very rare, I'm not saying it never occurs, but it's extremely rare that you would want to trade the thrust part of the move in a trend. Let's talk about the uptrend first, and then we'll discuss trade entries on the short side. Let's start with the long side first. Okay, and let me show it to you, illustrate it this way right here. Now I'm going to describe to you 3 types of long trade entries, and then we'll discuss on each one of them where proper placement of stops and targets would be located. Now this is a 2 range. Now if you were in the live room, say today or tomorrow or any day next week, you would notice that we have 4 range charts. That is the standard that we've used for 10 years. We haven't changed any bar sizes as far as how we approach trading on these charts. It's all 4 range. Now, why do I trade a 2? I like a 2 because I get the way that ES moves is I get more granularity, that's more detail around trade entries and movement. That's just a fancy way of saying I get more bars, I get more detail, and I like that. I've always traded the 2 range. Occasionally I'll trade maybe a 2 Renko or something, but the result is the same. Off to the left here, now when this background, let me get sort of this little box thing out of the way so we don't get confused here. When we transition from what had been a range-bound condition and part of a downtrend that we looked at to the left over here, and the range it was in, generally speaking, what will happen is transitioning to an uptrend is that some level of swings will be taken out to the upside in what is called a thrust up, a push or thrust in the upward direction. And in this case, that thrust looks like this. So the algorithms, what they're looking at is when you see background color changes and bar color changes and the midband starting to change colors, is that it's looking at the volatility of what the market is doing, and then it gives you the visual aid to see what to look for. Now we have these alerts over here too. These alerts you can turn on, so when you're in an uptrending type market, you would enable the long alerts. So you'd have a midband long alert, minimum criteria long alert, phantom long alert. Now before I just turn those on, so what happens is the bars will blink. So it's visually helping you see the trades that you're looking for. Let me explain what they are. Now, the first thing in an uptrend that you might get in a retracement is a pullback into this area here under line 6 into what's called band 6. This is called a minimum criteria long trade in an uptrend when the market has a thrust and it pulls back into here. And the criteria for that to be met is that you break this little sneaky snake line called stealth, the green one. See how you close below it? And you have to close below line 6. Now, if you go a little deeper in your retracement and you go into the band directly above the midband and or directly on the midband itself, this is said to be a midband trade. And if you go a little deeper in an uptrend into what's essentially is a band 3 above line 2, which is the thin red line here, this is on the alerts here, that would be called phantom or deep retracement long. So 3 trade entry types: minimum criteria long, midband long, deep retracement or phantom long. So let me ask you a question. Now that you know this, let's do a couple little pop quizzes. They're going to be 5-second questions, and so you're only going to have 5 seconds to answer them. And I'm going to blow the chart up. So we're all experts now on how to take these trades, right? We're all experts. You've been here about 15 minutes, and now you know all you need to know about trading, right? So here's the first question. Do these bars here meet the minimum criteria for a long trade, yes or no? 4 seconds. Just type in a Y, boop, yes and no, boop, just like that. 4 seconds, 3 seconds, 2 seconds. I'm not messing around. I got a lot of material to cover tonight, and I don't have a lot of time. So I'm gonna bit through this stuff real quick. Time's up. Yes. We just drew this and told you that it was the definition of a minimum criteria. If you had drawn the boxes I have shown it using the object trader tool, it never filled to the upside. Okay? Now, these bars right here, just prepare yourself. This is another yes, no question coming in here, okay? How about these bars right here? Are they considered a mid-band trade? Yes or no? 5 seconds. By our definition, 4 seconds. 3, 2. So yes or no? I mean, you should look at these bars and instantly know. 2, 1, time's up. Yes. Now notice how you don't get a lot of encroachment into the band above the mid-band right here. You only get a couple of 3 bars actually going into it, but by definition, that is a mid-band trade. Now, to take these, I personally like to see the bars get more, sort of down into this area right here. In some cases, sitting on the mid-band itself, or even forming little cluster bars just above it in the long. Well, that's what I'm trying to say, Gary M. So you might come in late. So let me just be clear. Can everybody see this little rectangle? So the definition of a mid-band trade in an uptrend, it must encroach into this band on the mid-band itself, physically on it, the bars, or the band below it. So are those yellow bars in this band? Yes. So it doesn't touch the mid-band, but it meets the definition of it. So that, in a nutshell, if you want to just sort of pull back up to the 20,000 foot level and think conceptually about what's happening here, is the reason we have these different trade types is that at any given point in any market, doesn't matter whether it's futures or not, it can be stocks, options, bonds, digital currencies, we don't know how far a market's going to pull back at any given point. It can pull back a little bit. It can pull back a lot. It can pull back way farther than we think it might. So in order to take a trade, we have to have some, how would you say, framework or structure defining how and where we would get in. And so that's how we developed this over the years. We found that if you try to take long trades in an uptrend where the retracement is very shallow, say like up into here, that by the time you get filled with a little bit of slippage, to get back up to here, there's just not a lot of meat on the bone. You know what I'm saying? There's not a lot of distance left to go, and you would have to put your stops way down here. So the risk return on shallow retracements, even in this powerful trend, is not very good. In other words, your target is to get back to the swing, right? You want to get back to here on retracement trades, and your stop would have to be somewhere down here under the midband. So this is your target, and this is your stop. Does that look like a very good risk-return ratio just visually without even running any numbers on it? No. That's obvious, right? Now, when you retrace down into, I'm sort of doing a quick explanation on the logic behind how we came up with this. Now, if you have a retracement that comes into here, and we want to return to the swing for our profit target, that might need to go to there, and the stop is in the same place. So what you wind up with then now is that your stop is now here. So in this scenario, what does the risk return look like? Without doing any math, about 50-50, right? Now, as the retracement in the trend goes deeper, your odds of success, and hence the risk return, go up. So in the case, scoot this over a little bit so I can make my point here. In the case of the deeper retracement where you go into the midband area, now you're getting long here. Where's your target? Where is your target? When you take a midband trade, where do you want to go? Where are your targets, plural? Any idea? You're getting long on a mid-band trade. Where are your targets? Where do you want to get to first, and where do you want to get to second? Any ideas? Just spitballing out there for you. What do you think? Well, let's look at it. If you're getting in near the mid-band, wouldn't we want to get a scalp trade-off, maybe just sort of at or around line 6? What do you think? Wouldn't we have a target up here so we can get a scalp off, maybe 6, 8, 10 ticks up from where we got in, right? So 6, 8, 10 ticks from there would put us up just maybe at or above line 6 on our entry, right? And then we'd want another contract, if we put 2 on, to return back to the swing at the top of band 8. Like that. Okay? So that's how we look at targets. Now your initial stop, if you put a market or limit buy order in here and you do it manually, you're going to have to place your stops yourself. In other words, you're going to have to put, say you put that 2 lot on, you're going to have to go in and put your stops down here or under here, under the swing, and then you're going to have to manually put the targets in, and you could be struggling in a fast-moving market. So you really want to try to learn that object trader tool where you just simply draw a box, engage the long side, and when it fills outside your long, boom, 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 targets, stops, everything's all placed for you. Trails engaged. You don't have to worry about anything anymore because it takes care of all that for you. So that's an incredibly valuable tool to use. But you could do it manually too, of course. Of course you could do it manually. So let's talk about numbers, and then we'll look at another trade, and then we're going to go to a different market. The scalp trade on ES is going to put you right at about, let's see, if you got in at 33, went all the way to 85, that's 8 ticks. If you have a 6-tick scalp, you would have been filled 6 somewhere in here, depending on your actual fills and slippage. And if you went from 83 to the top of the range, that's 87. That's 4 times 4 is 16. Now you have a second, you have 2 options on contract number 2. Now both would have stops located, and you can set this on OT to 10 or 12 ticks. So let's say your fill was again at 83. 12 ticks below that is 3 at 80. So your initial stop would be way down here somewhere underneath the midband. Now, if object trader, would you want to leave your stop not way down here? If you took this region box and the object trader got you long and the market's starting to move in your favor, do you want to leave your initial stops way down here? Do you need to do that? Or let me give you an alternative. Would you want to take them up real tight like a tick or 2 under that swing right there? Does that make sense? Is that a more appropriate place for a stop? So what you did is you cut your risk in half. You're still filled long at 83 on that bar right there, right? Now your stop is sitting down here at maybe 81, 81 3/4, 82ish. You're looking at more like 4 or 5 ticks of risk on a 2 lot versus 12. So that's what you want to do. We get this question all the time. All the time we get this question, and here's the answer to it. Just because object trader puts in a stop at your default at 10 or 12 ticks, and in this case that would have been way down here at 80, you absolutely don't have to leave it there. You just simply drag it right back up into here. Okay, so that for some unforeseen reason, there's a tweet, there's something about the trade war with China, there's something like whatever, and all of a sudden the market just flips, you're long 2 lot, and the market freaks out and tanks. You take a 4 or 5 tick hit, no big deal. You look for another trade. And every time you get in a mid-band trade, your first goal is to look for a scalp on a long to line 6 or thereabouts, and then to get at least back to the swing, which is identified normally at or around the top of band 8. Okay? Let me see how straightforward that is. I love mid-band trades and trends. That is my go-to trade every single morning. Every single morning on ES, that's my go-to trade right there. That's exactly what I'm looking for every time. And you don't have to take a lot of them. You pick off, 1 or 2 of those with a 2, 3, or 4 lot, you make 20 ticks on it, you could be doing quite nicely. Now, pop quiz. Before I move on, Can you repeat the multiple targets? Chibi, you might come in late. Do you see? I've illustrated here what the targets are from this long trade entry right here. Does everybody see what we're doing? Close above, Gene. Yeah, I always like to close above the bar outside of the box. What that does for me personally, there's other features built into Object Trader like Touch Plus. You can do market orders. Um, for me personally, let me just explain it this way. If there was not enough momentum to resume the upward movement, it's quite possible the bars could continue down much deeper. And I don't want to be long here, stuck in a trade while the thing's going down into here to finally find support. Okay, everybody understand that? I want to see momentum to go back to the upside. That's why I look for close. Now, there's other ways to do it. That's how I like to do it. Now, the third way to do this is you don't have to put your second target right at the swing. Many times it will make sense to peel it there because you can give a lot back on a pullback. However, the alternative to that is you turn your second contract into a runner. In this case, you can see where the stealth line and line 2, or line 6, the thin green line, are following the market up as it moves, as it moves, as it moves. Tight stops would be defined just under stealth. Looser, so when we make calls in the room where we say tight, put that stop tight, and I give you a number like say 87, 87 and a quarter, or 86 and 3/4, whatever. What I'm doing is I'm tracking this line up. See this line tracking up like this? Now, obviously you can see here a couple of good examples where you don't really want to put the stop trail right on stealth itself. So when we say something like, okay, now you're trailing your runner on ES, fade stealth or fade line 6 by a couple of ticks. So what that means is don't put it right on it, go a few ticks underneath of it, usually at least 2 or 3, right? So the wick of that candle would not get you out, wick of the candle would not get you out, closing down below it like that would get you out. Now if we say leave a looser stop, normally in a long trade we are referring to closing below line 6 down here on the runner. In this case, if you had not taken the stealth trail stop out here, you could let it come all the way back down into here and go a couple ticks under there, and then this long trade would be one continuous trade all the way up, all the way up, all the way up, all the way up, all the way up. That's how you catch runners. That's how you catch big runners. Most of your money, unless you're a super duper scalper with a high success rate on peeling those scalps, so that 80, 85, 90+%, and your stops are super tight, you can make very good money scalping the market, no question about it, especially ES, because 4, 5, 6, 8, 10 ticks, you can pop those all day long. However, you can catch these longer runs, and occasionally you will get these where it'll run 40, 20, 30, 40, 50+ ticks, and you can make a lot of money on these big runs. Now, what I'm going to do before we get off of ES here is I'm going to advance this chart. Okay, now knowing what you know, is there any other questions before I move on to a little pop quiz? We're going to do a pop quiz. I'm going to advance this ES chart, reconstructing real time, in the morning today on ES. And when you think you see any kind of trade entry, and let's say that we're really going for a long mid-band entry, you simply type in the letter L. Is everybody ready? Okay, when you see a long trade set up, and I'm going to advance this, I'm going to go like 500 times normal speed. So I'm going to start at 8:30 and probably go to like 11:30, and I'm going to do it in like 2 minutes. All right, here we go. Chart is starting at 8:59. When you think you see a long trade set up, you type in the letter L. Here we go. Advancing the chart, if it cooperates with me. 903, 904, 906. Looking for long trades on ES. Okay, here we are at 9:30. Of course, the market's moving a lot slower than what I'm doing. I just showed you 40 minutes of actual bars in like, 15 seconds. So this is going pretty quick, but it's good that you learn like this. You got to really learn, to see things quickly when you're looking for trade setups. Okay, here we are at 10 o'clock. Looking for longs. Trend is up. Everybody sees that. Solid green background. All the bands in the mid-band are stair-stepping in an upward manner. Predominantly blue bars. Looking for longs. There's 1058. 1104. 1122. 1125. Looking for longs on SE. Now we're at 1130. 1149. We're coming close to the close. Make the bars real big for you like that. 1150. An hour left to the close. 1152. 1153. 1157. There's 12 noon. Got 1 hour to the market close. There's 1205, 1219, 1235. Did you get it? Okay, now some of you, I didn't see everybody responding, and that's cool because, if you're totally brand new and you're seeing this for the first time, you may be like, I'm not saying a deer in the headlights, but, it's kind of like, well, I'm still kind of trying to figure out what I'm looking at here, and I totally get it. So don't worry about it, okay? Don't worry about it. But based on what I explained over the past half an hour, would you not agree that the apex of that thrust that ran all the way up from down where we had that other trade occurred with sort of a more or less a double triple top right up in here at this 96, 97 area. And we started to do what's called the retracement, like such. Now we do have another tool, and visually this might help you too, is you can take a ray or a line, and as the market is retracing it, you can simply sort of graze across the top of, you see, you get sort of an A, B, C, D, E little pattern as it comes down. Now, let me ask you this question. It's for the whole team, right? Where are these bars sitting right there? Is that a valid mid-band trade or not? Long. I mean, it's a yes or no. Either it is or it isn't, right? I mean, do these bars meet the criteria of a mid-band trade? How about this band? How about this bar right here? This bar right here, does that meet the criteria? It's physically sitting right on the mid-band itself. Every single person here tonight, and we got a huge crowd, a good turnout, when these bars formed right here, should have typed in the letter L. This is a textbook mid-band long trade on ES. If you learn this one trade entry type, I'm telling you, unless you just can't get it down for whatever reason, or you're trading a wrong instrument that's moving too fast, this will make you money every day. Every day. Focus on mid-band trades. They're killer, especially in trends. All right, good. Most of you got that. Total gold star. Excellent. All right, listen, we're going to run out of time here. What do we want to see next? Do you want to see gold or crude? We're going to try to get both charts in before we got to wrap. Gold or crude? Cast your vote. We got your old GC for the Goldie, and we got the CL for the Crudy. Ooh, it's a fierce battle. The gold traders are fighting the crude traders, duking it out. Let me count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. A lot of crudes. Let me count the goldies. 1, 2, 3, 4. Looks like the crudies got you. So we'll start with crude. We'll get to both, but the question was which one you would see first. All right, stand by. Chart loading. Chart loading. Phew. Almost blew up. Oh, I got to go back to a 4 range. Stand by. 1 second here. Been running this machine all day. She's tired. Turn me off. Let me go to sleep. I've been running since 5 o'clock this morning. I want to go back to sleep. All right, it's loading right now. Stand by. Yeah, you know, one thing as you load charts, I can just show you this real quick here. Well, it's going to help you out. When you got a chart that's going to have like a lot of bars, you can get to see pretty much everything you need to see, you know, in the short term within, I would say, 3 to 5 days. Okay. If you want to go back further, so where that sits is right here, days to load. Most charts, if you want short-term market analysis, you don't want to put 30 or 60 in there. Okay, it's going to take forever, and it might lock your computer up. Keep that to like 2, 3, 4, 5 days, under 10 if you can, and that'll make you the loading time a lot better for you. Okay, so let's go back and look at the crude pit open. I'd recommend 5. I just go 5. I usually do a 5, unless I want to look a little further back, like 2 weeks. You can go back 10 or 14 if you want, but 5 is normally very good. All right, let me scroll back to the crude pit open at 6 a.m. Pacific time, and let's see what old Crudy was doing at the open today when Gary opened the room up. I think, as I recall, she was in a massive sell-off. You guys took the shorts, I think. Where am I at here? All right, here's what I want to do. I'm going to show a big picture shot on crude, and then we're going to zero in. Okay, you ready? Here we go. 4-range crude chart from overnight, including today. I want to look at the big picture, and then we're going to zoom in on it, okay? Now, here was midnight Pacific on crude, right here. You can very clearly see that coming out of the Asian session into the European trading session in the early hours of trading crude, that you were coming out of a little bit of an uptrend in the Asian session, where it peaked out here, I'm guessing around somewhere around 56.30-ish. Right in here, see how she peaked out? We get a big sell-off. We turn the background red going into the beginning of the European session. We do a very deep retracement up to line 6. We roll over. We can't get back to the top. And so our background turns red and we go into a downtrend. So if you traded crude overnight, were you looking for longs or shorts? Between, say, here all the way over to when Gary opened the room around 6 o'clock in this area right here with the cursor. Are you taking longs or shorts in there if you were trading it? Say you're a what do you call that? Night owl trader. You can't sleep watching charts. You want to take some trades. Yeah, of course. Massive sell-off, downtrend move, 200 ticks. You're taking short trades. Good. Everybody got that. Okay, cool. Now, let's blow this up, and let's take a look at what happened right at the pit open. And Gary opened the room at 5:55 Pacific. So that would have been somewhere about right in here. Crude pit opens at 6. So I wasn't there at that time, but anybody who was there, can you answer the question whether a short trade was taken up in here on that kiss and roll? Did everybody who was in early before the crude pit opened, anybody catch that short? Did he call the short? I'm sure he did. Was anybody there? Yes? Some of you took it? Robert K., you shorted 4. You even short from earlier? Cool. Well, you know, I'll tell you what, we say this all the time, and there is some, method to our madness. Everybody say, well, you call the trades and tell us again and show all this stuff and whatever. Well, it's like learning anything. If you went to high school or college or any kind of school, and the professor or the teacher just spoon-fed you information, and you didn't have to learn anything, when you get out of that school or training or whatever you're doing, how good are you going to be at making decisions on your own? Being spoon-fed information. Not too good, right? In other words, you need, every trader, every person needs to learn how to see the trade entries themselves, because at some point there may be an occasion where you are looking at the chart you're on your own, right? You're looking at the chart on your own. You're not in a live room. We have a lot of traders dispersed all over the world who look at they trade currencies overnight. There's no live room to be in. You think they're making money? Of course they are. They learned the system. They don't need to come in a room. They know how to do it. They know what they're doing. They use the software. So this kiss and roll short looks to me like it's set up about right around 6. 556, 557. So he opened the room right around here. So it was a quick draw. It looks like the room was open for maybe a couple of 5, maybe 10, not even 10 minutes. And you got a kiss and roll short right here. See it? That was beautiful. Let's say you got filled short at, I don't know, use a round number, 60, 70, or 70, and went all the way down here and you stopped out at 15. This one short, which, like I said, I was not in the room and I did not take. So I'm just going sort of looking back at what it did. You got in here, and if you did the trail stop on a 1 or 2 lot, you got out here on a stop. And this looks to me to be somewhere around 50 to 55 tick drop. At $10 a tick, that would have been 5 bones a lot, yo. Could that have been your one and done on crude? What do you think? 550? Pull the trigger, 1 lot, 2 lot, you're up 10, 11 bones. You're in the thing for not even a half an hour. Yeah, you're darn right, done and done, Robert K. Oh yeah, that's right, Louis. That's a textbook shot of a one and done on Crudy right there. Now, let's suppose you missed it. All right. What starts to happen here? Maybe the team can clarify something for me. Is anything happening when you get this huge short covering right here? More specifically, what is happening right here? What did those bars do? Did anything change from overnight? Did the background happen to go from red to transition to green? Maybe. Is that the beginning push or thrust on a trend change, perhaps in the now in the up direction? Maybe. What would confirm whether in fact that was a legitimate trend change to take long trades now? What would have to happen on a pullback? Might the midband have to hold? Here, let me ask again. Might the midband have to hold? If you don't like that one, how about this one? Might the midband have to hold for long trades? So let me ask the team, are these 3 boxes legitimate long trades now? Furthermore, the question would include the caveat of, are they long midband trades? What say you, team? Yes or no? What do you think? Are these 3 boxes on oil this morning between about 6:38, 6:40, and 7 a.m. legitimate long trades, yes or no? You got 5 seconds. 4, 3, 2, 1. Time's up. Yes. Of course they are. Right? Background is solid green. Bars are predominantly blue. Midband and all the bands are doing what? Stair-stepping up. You're getting a series of slightly higher highs and higher lows. Midband is holding 1, 2, 3 times. Yes? This is textbook crude oil long trades right here. Right? Yeah. I mean, it's sitting on the midband itself. Let's look at the last box. Okay? Let's see what that trade turned into. Let's say hypothetically you'd drawn it like I have shown here. Now, let me make a point here. If a market is in a strong trend and it appears that it's going to hold that trend for some period of time, you're going to want to enable long only on your region boxes. And the reason for that is that at the time those boxes are drawn, you don't know if you're going to retrace a little bit deeper. right? You could pull back a little bit deeper and stop you out, and you miss a big run. Okay. Now, where you'd want to start taking short trades is when you break down. Here's a case over here. We can very clearly see that the trend continuation was down, and we retraced back up over to here. So now you're looking for shorts. Conversely, the trend is up. We're looking to buy. So this did not happen, and that did not happen. Now, if you drew the boxes I have shown, you would be filled on the close, depending on when you drew it, of one of those bars right there, long, with a market order, and your targets and stops would be placed. You know, that bar, that bar, that bar, any one of these bars would get you long, depending on where you drew the box. Now, how far did this long trade run? Well, let's take a look. All right, so let's do some numbers real quick. Let's say you got filled hypothetically at 54.40. In fact, I believe, as I recall, I took this trade. I didn't take this one. I know Gary did. I didn't take that one. I know Gary did. I took this one. I distinctly remember this one because this is the one that popped. Yeah, it was a beautiful run. And you very clearly see here that if you used a combination of stealth and line 6 for our trails, we got taken out right about there. So how much was this third long worth? Well, 42.87, 47 ticks at $10 a tick is how much? $470, less commission. Actually, you had two. Let's not include these. These would have been good scalps. You probably would have got, I don't know, 32 to 42, 10 ticks there, and maybe you got 32 to 47, 15 ticks there. So, you know, 10, 12 ticks, 15 ticks, and then another, what did I say that was, 47 ticks, and you had, what, 55 ticks on this drop right here. If you'd taken one short, 3 long trades, how much would you be up? Probably over 100 ticks, right? On a one lot, that's 10 bones. And you're done at 7:10. Jeff, as I recall, I did not take those two because I trade other instruments as well. So I'm watching. I have 4 huge screens here. Okay, I've got ES parked. You're looking right now at screen 1. This is my primary go-to screen, and on screen 1, I usually have ES. So I'm focusing heavily on trading ES. Okay, unless ES is choppy and I don't want to take it, or I already took trades and I made good money and I don't want to trade it anymore. To my immediate left is the crude oil chart. So I go. That's my next go. As my shift for trade taking, crude is on the screen, second huge screen to the left. Immediately above that is gold. So I'll be scanning. I'll be taking trades on all these charts. And on the 4th screen above screen 1, I have Russell and YM, and I trade those two. So my screen arrangement on 2 big stanchion stands looks like this. So this will explain why I miss trades occasionally, because I'm watching so many things and I'm juggling a lot of balls here, and I'm trying to call trades in the room while I'm pulling the trigger on all these instruments and managing money. So, you know, yeah, I'm going to miss some. I just am. I'm not a robot. I'm a person. I'm a real person. All right. So just to let you know here, yeah, real quick. So screen 1, I trade ES. I would not recommend this unless you've been trading for 20 years, which I have been doing for over 20 years. So you got a lot of balls to juggle. You can really get away with 1 or 2. On screen 2, I have the crude oil chart like this. And most of you've been in the room with Gary and I. When I'm not in, so I'll call something. If I'm not in it, I'll tell you. I'll just tell you I'm not in. I didn't take that one. I saw it. I was busy with something else, and I miss it. But, you know, I'm trying to help everybody else, too, at the same time. On 3 up here above 2 is gold. On the full screen, okay, the entire screen is a gold chart. And then over here, this is screen 4, I have RTY and YM, just like that. If you were to look at a picture of what I'm looking at right now, that's what it looks like. So the screen on 4 is split. I don't trade NASI anymore. In fact, Louis, everybody, I have taken NASDAQ completely off of all my screens. I used to park NASI up in one of these other screens. I'd look at NASI and try to work it in somewhere here, and it was just so distracting, and it would cause confusion in my decision making. And what you have to find for yourself as you go about your trading career and your learning system and everything is you got to find the instrument you like, whatever one you prefer the most. You put prominently right in front of you like that, because that's your bread and butter right there, right? And then if you have multiple screens, if you have the benefit of a big stanchion with all these big flat screens, then you put your secondary one right next to it, whatever that is. So I'm scanning for taking trades here. Next I look here. I go up to gold, tertiary, third look for trades. But I'm scanning, my eyes are scanning. I've been doing this so long, I can quickly scan and discern what to do. And then the last in order for trade taking is up here. Now, what happens many mornings is that there is confluence. If all the algos are working correctly, what will happen is these three will be heading, let's use an example hypothetically. The equities are selling off in our example here. So I'm looking to take shorts here, and I'm looking to take shorts here. And normally, if the world's kind of working the way it's supposed to, I'd be looking for longs here. Okay, see how that works? Now, since crude oil does not necessarily follow, it used to follow the equities. In other words, normally maybe a year or two ago, crude would follow the equities. So if you short the equities, you would normally short oil, but it is quite possible in some cases that oil could march to its own drummer. While you're short the equities and long gold, crude could be going either way. So you just have to make that decision. Everybody see how the logic behind what I'm doing there? Yeah, so that's how it's all set up, and that's how I trade. Now, in Gary's case, I've not seen his screen set up, but his is probably reversed. He probably has crude sitting here because everybody knows that's his primary go-to instrument, right? Very, very, very good detailed crude trader. Probably front and prominent center right in front of him. And I would guess gold would be right here because that's a secondary go-to instrument. And then I know he trades ES. I don't think he messes with these two at all, so I don't know what he has on his 4th screen. I think he might have 6 screens too. I'm not sure. It is a challenge, Gene. Yeah, I have to say a long time ago when we started this business 9-10 years ago, trying to juggle the balls of taking live trades on these screens and calling trades in the room is a it's a challenge. You got to really work to do it right. But I've been doing it a long time, so I kind of get a feel for what to do here. So anyway, you want to try to get a Louis says I love crude oil and that's all I trade right now. Cool. Find an instrument and master it. Stand by before we run out of time. I got a couple of 5 minutes here. Let me get let's try to squeak a gold chart in here real quick. Didn't mean to get sidetracked on my apologies on that. I get sidetracked on my little setup. I don't know how I got on that. Oh, I know it was. Somebody said, "Why'd you miss that trade?" Well, now you see why. Got a lot of balls in the air. Okay, so the gold chart's loading. Hope we don't lock up here. Get the data up here. We'll go back and look at the open real quick, see what kind of trade set up on gold. Before we show the open on gold, I do want to speak to an issue here that I have not addressed, but most of you know, of course, this is very important. We looked at, discussed the fact that there are many times where markets will go into a sort of a choppy mode, sideways mode, or consolidation, if you will. And very quickly, the criteria for this is that the mid-band is flat and sideways. All the bands are flat and sideways. The markets are not making higher highs or higher lows. All the swings are almost roughly in the same place. You can put a line at the top of the range and a line at the bottom where support is and decide whether you want to trade it. Our minimum criteria to trade ranges is 20 to 25 ticks. Generally speaking, if the range is not that large, there's not enough meat on the bone to make any money. last thing I want to say about this is most ranges, unless they're huge, like 40, 50 ticks, then there's plenty of meat on the bone between the midband and the external part of the support and resistance. Generally speaking, you will not take midband trades in ranges, simply because by the time you get here and you get slippage and coverage and you fade the bottom and you fade the top, there's not enough room to make any money. So midband trades are out. Now, if you're shorting the top, this is a quick word about trading ranges, okay? If you're shorting the top of ranges, your initial target is to get back to the midband. And of course, you can see very clearly your secondary target would be to get down to the bottom of the range on the shorts. If you are buying support in a range, I'm just describing different types of ranges. You're buying support in a range, you're getting long at the bottom, your initial target is the midband for your scalp. And of course, you want the runner to get at least back to the top of the range, trading the long side of a range, okay? That's how you approach that. And the way you do it is, and you find it in real time, is that once a swing low and swing high are established, you have to put your support and resistance lines in first. And once those are respected and it doesn't go outside of that, it's very clear that now you are in a range. That's how you do it in real time. Okay, because I get that question all the time. Well, yeah, Mr. Charles, Mr. Armchair quarterback, sitting all nice in your chair there, saying, oh, yeah, you could have tried it. Well, I've shown many, many times, I know Gary has too, you got to put your lines on your chart, right? You got to know where your swings are. And if you do that simple thing, just do that simple thing, you'll very quickly know in real time whether you're trending or in a range, right? All right, okay, let's get back to where the room opened. Gold was a little bit messy. I didn't think I took any gold trades until later. I'll just show it anyway. Oops. Nah. Goldie, you're being bad. I had everything all set up, ready to go, and then she kind of squirted out on me a little bit here. Just give me 1 second. Let me get back to the open. Almost there. There we go. All right, stand by. There we go. Okay. All right. So the live room would have opened somewhere approximately right on this chart right here. Clearly see that coming into the pre-market session for the European session, the trend was down. We did not get a rollover here. I suppose it's possible you could have caught a long. I was not trading it at that time. I don't know if Gary took a long here or he shorted. Anybody remember? Did he short this up here? This is before I was in the room. Anybody remember what he was doing here with gold? Or maybe he wasn't trading gold yet. Maybe making too much money on crude. Yeah, now, you know, on the short side, we talked about the fact that, or maybe we didn't talk about the fact that you're still looking for mid-band trades. Minimum criteria short is where you come into here, which is the opposite of the long scenario. So you want to retrace up into that. That's the minimum criteria. Obviously, you can see very clearly that mid-band short would be located here on the short side, and deep retracements could go as high as this. So in the case of this retracement here, these blue bars, it went beyond what's considered to be, you know, sort of the deep retracement phantom trade. I don't know if anybody took that. We did break down. You did come through the mid-band. This was a big sell-off, and it tried to bottom out around 1950, like such. You can see right here that there were some minimum criteria scalps here, here, and here. And then it looked like it tried to want to go up, only to be spanked over here at 7 o'clock, where she reversed. Now this is, I want to be clear about this. News bots were engaged very clearly here, approximately 7:09, 7:10. If most of you recall, on all the news outlets and on Bloomberg and what have you, there was either an announcement from the White House or a tweet. I don't know exactly the mode or method where that came out, but there was some news that there's going to be talks on China and a short-term deal. So a short-term deal on China tariffs means that the equities are probably going to go what direction, and gold's going to go what direction. Equities are going to head up on the news. The news bots are going to run the equities up, and gold's going to do what? Sell off. Now, you could not have possibly caught that thrust simply because 709 is here and 710 is here, and you don't get 711 until way over here. So you had a shotgun of, I'm guessing, at least 50 bars down in 1 minute. That's what you call automated news bots. News bots are scripts, they're algorithms that are locked into news feeds, and they're constantly reading the news feeds and interpreting the news feeds and reading the news feeds and interpreting. And so when there is a consensus with the news bots that the news is good for the financial markets, the equity markets, they immediately kick in buy programs. And so if you recall, ES and all the equities shot up on the news. The news bots ran them up. And so correspondingly, what happened in that first few minutes of news bot is that gold went down very precipitously. What I'm saying is you could never catch that. I mean, you know, even if you had, let me advance a little bit and just talk about this. Let's say hypothetically that you had a region box or a buy or a sell order sitting anywhere like in here. With the algorithm pumping, you probably wouldn't have even been filled until somewhere way down here, which is extremely risky because you don't know, you know, once you get that much slippage in something, you've got to get a lot of movement to make it up. You really want to avoid those. You know, many news events, you know, if you're a one-up trader, you're in a combine and top step trader, a lot of times they won't let you trade it at all. And the reason they do that is for this reason right here, the news bot shotguns, right? And then gold went into more or less a consolidation area. You could say you were sideways to down. So in here, you were still looking for shorts. It wasn't giving you much. It kind of did a little funky thing. And then here about 7:50, right, going into 8 o'clock, we get a tear on gold right back up. News bots weren't done yet. Correspondingly, as I recall at that time, the equities began to sell off. I think I was done trading, but I don't think I caught any of this, as I recall. But that was gold today. All right, I've run over here a little bit. It's okay. Let me stop the recorder. Any final questions?